Welcome to In Depth for a closer look at what is making mining headlines in the Americas. There's been a cloud of anxiety building over certain Chinese companies listed in North American exchanges, with allegations that some of them are overstating their finances. Matters reached a climax in August when the Ontario Securities Commission suspended trade in the shares of TSX-listed Forest Sino, which has forestry operations in the world's most populous country, or so we thought. Familiar-sounding claims soon arrived at the doorstep of Vancouver-based Silvercorp, alleging, among other things, that the grades at one of its Chinese mines were simply too good to be true. MineWeek's deputy editor for North America, Matthew Hill, who is based in Toronto, Canada, joins me to give some insight about them. Matthew, who is making these allegations against Silvercorp, and what are they saying?
Well, that's the whole thing right now, Martin. Nobody knows who's making these allegations, and even Silvercorp themselves say that they're in the dark as to who the assailant might be. They say that the letter they received made allegations that the company firstly reported a $66 million profit in calendar 2010 when it actually made a loss. Secondly, they say that the letter claims the company grossly exaggerated its $230 million cash position at the end of June this year. And then lastly, as you mentioned, the letter supposedly claims that the grades at Silvercorp's mines in China are simply too good to be true.
How has Silvercorp responded to these allegations? And would you say that its response was adequate?
It was certainly quick and decisive in responding to the allegations and denying all of them. The spokesperson of the company said that they received the letter from Ernst & Young, their auditors, at 4 p.m. on the Thursday afternoon at the end of August. They had already prepared their response by the following Friday morning, and this wasn't a simple press release that they issued. They also took the effort of putting up links on their website to their bank statements showing that they did in fact have the cash that they claimed to have, and then also tax documents out of China showing that the profits that they reported in 2010 were real profits. The company also says that it's forwarded the information to the Securities Exchange Commission in the United States and then also the Ontario Securities Commission here in Canada, where the company has a listing. Silvercorp does, however, refuse to make the letter public. They say that they're not going to send out a document which is libelous towards them.
Are there any parallels to be drawn between the Sino Forest saga and what has just happened with Silvercorp?
Well, the one obvious parallel is that both companies received these reports from people claiming to have short positions on their stock, which basically means that these people were betting that the share price was going to decline. Other than the allegations of fraud, the fact that both companies have operations in China is probably the thing that they have the most in common. Other than that, there doesn't seem to be much correlation between the two companies. I suppose an important point to make here is that Sinocorp's fraud accuser, Carson Block of the investment company from out of the States called Muddy Waters, is a reputable character, if relatively unknown before the Sino Forest saga erupted. Whereas in Silvercorp's case, as I mentioned, the allegations are coming from a faceless accuser, which perhaps detracts somewhat from their credibility if someone isn't willing to put their name behind what they're saying. And in fact, Silvercorp has put together a group of people in its company and said that they'll work with the Ontario Securities Commission and the SEC to find out who is making these claims. And they say that when they do find them, if they do in fact find them, that they want to take them to court and sue them for losses that the company suffered because of these claims. And when they came out, its share price did drop nearly 10% as investors panicked on the links to China, and as you say, there have been other issues around that.
What lessons can other mining companies take out of this?
I suppose the main thing here is if a company finds itself in a similar situation to Silvercorp, you've got to grab the bull by the horns and be proactive in letting your shareholders know that something's going on. Even if the claims are completely false, let people know that it is there, and describe the steps that you're taking to address them quickly. That way you can limit the damage. I suppose the other thing is an important point is to keep your business simple and keep your corporate tax structure simple. Because if investors clearly understand the way that your business works and they know how the money's flowing through your company, then claims like these won't really carry much water if they do ever arrive.
Thank you so much, Matthew, for your time. That's the show for today. Join us again next week for more news and insight on mining in the Americas. I'm Martin Joaquino for Creamer Media in Johannesburg.